Ladies and gentlemen, somebody had to do it. Somebody's got to tell you the truth about stock market influencers. Don't get sucked in, folks. Did someone say truth? What's up? Stand up and say what's up. R-Truth said it best, folks. He did. And I'm going to stand up and tell you what's up. Why do we got the account showing up here? I don't know, just to do it. Because guess who else is a stock market quote-unquote influencer? I'm not really, let's be honest. Not really any people watching. But some people need to get a heads up if you do see this. There's a lot of misinformation out there and a lot of people with a lot of traction that aren't necessarily going to be doing great things for you. I'll just tell you that right now if you take their advice. And look, there's a reason why you'll see, in these videos, we'll just take a brief glimpse of them. All of them are going to state something to the effect of, this is not actual advice. In the description, they're not going to say it in person talking to you. And this is why I'm very, very hesitant on making stock picks myself. I don't tell you many suggestions of what to buy versus what you need to sell. Stuff I don't like doing that because let's just be honest. The truth of the matter is we're going to be wrong a majority of the time. We're going to be wrong. The people that you're listening to here on YouTube have no financial, really a lack of financial education, a lack of financial experience from a professional standpoint. These guys aren't CPAs. They're not. These guys they're not analysts. I mean, what do you want me to say? The people you're listening to are people like you and I. I've got a college degree, and I've been in the financial industry for a little bit. So I have probably more experience than most of these guys. Anytime you see this, look, the way to get big on YouTube via financial videos really is, it's going to be the sensationalization. That's why you see these big top results are going to be gloom and doom. They're going to be, buy this stock for $50,000. I don't know, 50K, 50X results, 50X profit in the matter of a week. And why do I know that? Because I just searched it on YouTube. I just did it because, this is what people are going to do. They're going to say, what the heck how do I make money? And then this is what pops up. This smug face on this guy, Tom Nash, Steve Nash's brother or something. I mean, what is this guy? This BS, 85,000 views, and the buddy's the title says the stock market apocalypse just started. I mean, talk about sensationalization. That's just not the case, folks. It's not the case. And here you get one of these traders, only 24 to 48 hours. It's the call to action that you must click on this or you won't make money. The people behind these aren't gonna make money. I'm just telling you this right now. If you're putting out a video like this, you're not someone that's making money. Neither is this guy, Stock Mo. Yeah, this guy's a bum. I mean, he's a bum. Stock market crashing, crypto crashing. I just loaded up on this with a rocket ship emoji. It's not going to the moon. You suck, buddy. Listen, don't make specific stock picks because you're gonna screw up. By the way, I should point out, look at this. Look at the video of Mr. Ted Kaczynski over here. Nothing in this video constitutes tax/legal/financial and or investment advice. Weird that you put that in there, buddy. And all these sponsored ones are freaking for crypto. So get this. I mean, that guy, look at that smug looking face, man. That's a punchable face. It's wrong to say it, isn't it? This guy too. Come on now. This guy, look at this face. He's trying to be Mr. Beast or something. Dude's pulling the Home Alone face on us. What do you think you are, Macaulay Culkin? I mean, buddy, stock market crash. World market crash overnight. Oh my gosh. It's crashing. Come on now. And people buy into this stuff and freak out. English subtitle. You know what? Maybe you're okay. Look, this guy's not doing anything smug. Nothing smug here. This leads to the question, folks, where do you get information? Well, it's really hard to parse through information on social media. It really is. even something like TikTok, let's be honest, it's hard to parse through anything on there because TikTok's even worse because there's such a short format of the videos that you basically are going to be, the only way you're going to go viral there is by being hyper dramatic with this stuff. And you have to be. And then you get to something like, let's just say you use, I don't know why you'd use Reddit for stock market advice, but the number one thing you're going to see is Wall Street Bets. And the majority of these guys are absolute bums. They lose money all the time. And if that's just what you're doing to look at it, that's fun. But don't follow the advice you see on Wall Street Bets, folks. You don't do it. There's one tried and true method to succeed in the market, and it's called being consistent. When you look at the Dow Jones in its history, it only goes up. It only goes up. And this is just a basic, you just put it in an index fund. You're making money consistently. Do not spend all of your money on these wild plays that these people try to recommend. Now, look, you need to do your own research. That's what you do. Don't just Google or YouTube how to make money in the stock market. You don't do that, folks. That's not what you can do because these guys lose a lot of money. Think about a certain YouTuber who was shilling Tattooed Chef a couple of years back. Maybe 3-4 years back. The company's bankrupt now. He said he had a large bet on Tattooed Chef. The company has gone bankrupt. And this guy's got a massive audience. You might know who I'm talking about. It's not the only time he's done that. He's done the same thing with crypto scams too. So, look, you can't just see someone that's got a lot of subscribers and say this guy automatically knows what they're talking about because they probably don't. And this is really the main point of this is there is room for some of those plays. But let's be honest, you got to do your own research. Here is how I would adjust my portfolio to mess with that. If there's a stock that, I see, hypothetically that I saw that was like, this stock is poised for a bounce back, I do my own research. If I like it, anytime you're going to see a stock that's going to potentially pose that type of return, it's going to be a speculative stock, right? It's one that probably has the potential to also turn the wrong way around and go bankrupt, i.e. a Tattooed Chef. So, again, I'm very selective in what I do personally. The only stocks I've really openly recommended here over the last year, I told you, I told you some dividend stocks last month. I still like those plays. I do. No chance of those really going bankrupt anytime soon. And then last year, look, I'm proud of this one. I told you to buy Meta last year. I told you to buy Nvidia last year. I told you both of them, my top stocks for 2023 onward. And I hope you accept that. And you want to know what? That's because I'm not nutty, okay? I'm not picking out some random company. I'm not telling you to buy Stitch Fix. If you want to, you can. Anyways, here's my portfolio allocation. Look at this pretty page I made here. Are you kind of happy about it? I'm kind of happy. Let's center a little more. I had the screen region a little messed up, okay? So here's my typical portfolio allocation. Because this is what I think most people should be smart and do. We can't just, make massive bets like the people in Wall Street Bets onto the speculative plays. It doesn't work that way. That's not how you make money in the market. Overall, you're going to be losing a majority of your trades. I'm just being honest with you. But here's where I don't lose a majority of my trades. It's with this basic, kind of boring allocation. Our value plays, we're talking about stocks with PE ratios below 25, in line with the market or less. I've got 30 to 40% of my portfolio in these type of companies. We're going to be talking about a Texas Roadhouse, a Coca-Cola, a Pepsi, Cisco. These boring companies that people don't want to talk about. But what do? They get you a consistent return in the market. That is what we classify as the rock of the portfolio. So where other sections might fail, your expectations, these value plays, if the other sections fail, people will keep their money in the market and they'll flock to these value plays. You could make up that money that way. Now, we've got a similar portion in growth. Now, historically, I probably wouldn't have said this, but I've definitely changed my tone on that. And that's really just because of the market we're in. Growth is king right now. And that's going to be really, look, you look at your growth, it's way different from speculative. Let's be honest. This is going to be your AMDs, your NVIDIAs, your Metas. Really, it's a lot of NASDAQ stocks. These are high growth companies. But with the stipulation, folks, they have to be making a profit. If they're not making a profit, those are speculative in my eyes, right? Tesla was speculative prior to them actually making profit. Now, some might say they still are speculative just because of the industry they're in. But hey, I'm just telling you right now, that is what I'm feeling. This 30 to 40%, usually on the lower side, closer to the 30, it's going to be your AMDs, your NVIDIAs, your Metas. And, Apple's kind of in a weird spot where it's kind of in between right now, value and growth. So those can intersect. It definitely can. And that's fine. Then after that, I've got 10 to 20% in high yield, referring to dividends, by the way. You know me, I love my dividends, and this is going to be stocks yielding, really 5+% in terms of dividend yield. We're talking about your, unfortunately, Realty Income's in there. Arbor Realty Trust, absolute banger of a stock. I've been loving it. Iron Mountain, another one that's been just a consistent, just an absolute, just a great one for me. Yeah, and then like a Hercules Capital, something of that nature. Your business development companies, REITs, are usually going to be in this category because those are typically the only stocks that are going to be yielding that. Besides potentially some energy companies will have yields higher than 5% on occasion, so something to look out for. And why is that? Well, the reason this portion of the portfolio exists is in times of really rough market conditions, i.e., let's say a 2021 type situation where the market doesn't move much. You can still get returns in the market, 6+% depending on your yield, because if you pick the right companies that yield high, even in bad market conditions, they're not going to cut that dividend. They're not going to do it. So even if the stock isn't going anywhere, you don't need to sell the stock. You can still get a return in the market and potentially add on to your shares at a lower price. So that's why I've got high yield at a decent portion there. Then here is where we get into speculative, folks. What do I consider speculative? Okay, there's a reason why I've been performing pretty well in line or above what the market's doing. And that's because of this allocation here. Speculative, just going to be your stocks that have a potential for high future growth, but nothing is set in stone. Nothing at all. We're talking about, I hate to say it, a company like an iRobot. They don't make profit. A company like a Stitch Fix, no profit to be had. They don't believe in it. They've never historically made profit. But the market they're in has potential for growth in the future, right? We're talking about robot vacuums. Think about the potential that has in the future. I mean, there's potential there. But right now, they're a piece of trash. And let's be honest, at any point, they could go bankrupt. That's what these speculative stocks are. And that's what these people that are posting these pump and dumps, go to the moon right now, I loaded the bag. These guys are talking about speculative plays, your tattooed chefs. These are companies that aren't showing any track record of really success. I hate to say it. You may grow revenue, but if you're not at all growing your bottom line here, well, what's going to happen? I mean, come on now. If we just keep boosting and losing more and more money, eventually the company might go bankrupt. That's why we've got a small portion in this. What do I include in speculative also? It's going to be options. I'm putting that in there as well. By the way, just made some good profit on those Apple calls that I told you about on our last video. I'm just telling you, when I buy options, I buy them to win. And that's what I plan on doing. But again, when I play options, I only really allocate at most 1% of my portfolio to those options. I'm not usually having more than $1,000 even at any time, so closer to like a 0.6% of my portfolio. I don't really have more than that in options at any time either because it's speculative. Anything where you could just quickly lose your money overnight, drop to zero, it's not worth getting all of your money in. Now it is how you could get greater returns. But even getting greater returns at 5% of your portfolio is massive. It reduces the risk, and you still get some of the benefit. Don't mess with America unless you want the benefit, is what some people have said. That's what some people have said. Joe Biden said it himself. And then our final bit. Look, sometimes it's closer to zero for me. The fixed income and money market just depends on the situation we're in. Fixed income, I'm not a buyer in fixed income. Besides these super high yield times we're in, I've got a couple fixed income plays. It's only about 3% of my portfolio. When I see a bond or a CD slash bond 5.3+%, it's hard to pass it up because it's guaranteed money. Now the market every time beats it. I'm just telling you right now, the stock market every time beats the bond market. It does. Over time, you'll always make more money in the stock market than you will in the bond market. That's why I feel like it's a little bit of a trap, but there is a lot of safety when it comes to that fixed income market, and I get it. And then money markets. Really, for me, it's just a source to park cash until I need to buy something. Usually, that's whenever I'm playing options. I have that money market available for if I see an options contract that I want to buy, I'll buy it on the day and then sell that money market so that way I'm not utilizing any sort of margin or going over my cash limit. Because I'm not going to be paying freaking margin interest at these levels right now. I'm not going to do it. So, yeah, folks, long-winded, but that's why you don't believe what you see from these influencers. You don't believe it. And is it hypocritical coming from me? Maybe it is. But anyways, that's what I got for you. Have a great one. I hit the wrong button. Who did that?